And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, the show where we put you in front of where the action is in the broader market. So, bit of a bumpy ride this week. We are going to jump right in, and I'll share with you what we are going to be covering today. First up, as usual, we are going to take a look at the broader markets. We want to see how we end it. Are we in a good standing or not? From there, we will, of course, go ahead and take a look behind the scenes at some of those sub-industry groupings to get a feel for just precisely where the markets are. And a look at earnings season so far. We haven't had a lot in the way of companies reporting their fourth quarter numbers, but certainly enough to give us a sense that we might be in for a bit of rockiness as it relates to corporate earnings as well. A theme is beginning to potentially emerge. And then also using ETFs to capitalize on the market actions. It is so focused as far as areas that are actually doing okay. And then there are ways from there to then capitalize on that. So we will get into that. And also the anatomy of a turnaround in a stock. And I'm going to share with you precisely what characteristics you will need to see. And then from there, we'll take a look at some stocks that are trying to turn around. Certainly a lot in the way of headwinds, so not sure how much progress they'll make, but a lot you can learn from that segment as well. So impactful news this week. Fed Chair Powell did speak in front of the Senate Banking Committee, and he did have comments regarding not raising rates too swiftly, soft landing as far as the economy, just enough to start the week firmer. However, as we moved on, we did get some economic numbers that rattled the markets. Consumer price index rose 7% in December, and it brings inflation to a very high level. We'd have to go back to the early 80s before seeing inflation that is currently running. Markets did not like that. Oil prices are continuing to climb. We'll get into that, of course, and take a look at the impact there. Interest rates did pull back. They closed flat for the week, certainly relative to last week's spike in interest rates. So reaction there as well. Producer price index, it rose modestly, so not too much to report there. However, Friday, today we did see retail sales in December fell 1.9%, while consumer sentiment for January fell to a 10-year low. And a lot of that is inflation fears, Omicron related as well, and certainly impactful on those retailers. So let's get started. Take a look at the markets and where precisely we did close. The S&P was mostly flat, but we can see on this daily price chart of the S&P just how bumpy a week it was. And this is volatility that has been with us since the start of this year. And certainly it is anticipated, unfortunately, to continue until we get a bit more in the way of a platform, a stabilization, whether it is going to be earnings related or more in the way of Fed calming of the nerves, if you will. So here we are with the S&P 500. And from my work, I want to see this index above this red 50-day simple moving average. That's going to be ideal at the very least for near-term support. And that 50-day moving average is currently at 4681. And the market's closed at 4662, so we are just below that 50-day simple moving average. Your outside momentum indicators, negative RSI, and your MAC stochastics. And so we can see that generally the markets are in a period, again, of high volatility, not a period where I would put a lot of money to work. It's very, very cautious as far as my near-term outlook. I will expand upon that, of course, with my MEM Edge report over the weekend. My subscribers, actually, it will go out Monday. We have a nice long weekend ahead of us here, but let's take a look at the NASDAQ, and the NASDAQ fared actually similarly as far as being down just a bit for the week, but we can see that it is struggling. This is that daily price action. And we can see we started the week strong as far as growth stocks, and unfortunately got a bit walloped as the week progressed. And we are just here at that 200-day simple moving average. That's at 14,726 is the 200-day moving average. And we closed at 14,893. So we can see we're just barely hanging on there. And then also our outside momentum indicators are also negative, stochastics and RSI down below that 50. And we are going to keep our eye, because this NASDAQ, of course, is filled with high growth names that are, for the most part, struggling. There are bright spots there, but we're overall not looking particularly healthy here in the NASDAQ. So let's take this a step further and take a look at some of the underlying, or actually all of the underlying sectors in the S&P 500. So these are the 11 sectors. I've gone ahead and added that relative strength indicator. I'm going to update this because in descending order, it will present us up here on this upper left quartile with those areas or those sectors that are relatively stronger. It doesn't mean that you need to jump right in, but this is where our strength is. And for those that watched last week, you'll know it's all about energy and financials, but also we can see staples up here in the forefront as well. These higher interest rate names, they are able to raise prices in the face of inflation. So there are a number of stocks in that area that are gaining traction. We talked about oil and energy hitting a new high here. Energy was the sole sector that was up this week, and boy, did it deliver, up 5.2%. This is a downtrend reversal. Again, my MEM Edge subscribers will know on this Monday, we sent out an alert that energy had turned positive and began adding stocks at that point. But let's take a look at where we are now, because that's all history and behind us. We want to get a feel for where we stand now. I've added a 5-day simple moving average. So when this industry group, it's one that we have embraced several times over the past 18 months. And we can see that 5-day simple moving average can be really quite helpful as a gauge for whether this sector is still in an uptrend. Once we begin to see a leveling off, a break below that 5 and then 10-day moving average, that is signaling that at the very least a period of consolidation is ahead. At this point in time, we are overbought, but certainly that uptrend very much in place. Lots of bullish factors that are causing that: higher interest rates, inflation, lower dollar, and so on. So energy, again, up there at the forefront, but equally important, we want to make sure you are not heavily weighted in some of these weaker areas. So let's take a look. I mentioned to you retail sales numbers down, consumer sentiment as well, and retailers did not fare well. This is the consumer discretionary sector, XLY, down 1.5% for the week. So that is an area that I currently have no names. This is an area that was getting more and more narrow over the past several months, to the point where there are really not that many retailers that are looking constructive at this point in time. So some other areas that are important, certainly from my work, I'm all about getting in front of these faster moving, high growth names. So I like it when tech is on the move, similar to this period, May into September, and then again, October into December. A little choppy there, but certainly uptrending areas within tech. But take a look, very similar to the NASDAQ, we're seeing this potential continued downside price action as your outside momentum indicators are negative. There are bright spots in here, however. We have a couple of names that are really had a good week last week in tech, but far and few between. We'll get more into that as we move on here, because I do want to share with you the sub-industry groups, taking it even deeper dive behind those sectors. And here we have various sub-industry groupings. I have all of the indices, the NASDAQ, the small cap Russell 2000, banking, gold, lots of interesting goodies here. So what I'm going to do is, again, I've added that RSI. I'm going to update this so we get the latest standing after the close. And we can see this is the financial group banking stocks up here in the forefront. And KRE is the ticker symbol. Regional banks up almost 2%. So nice upward trending price action here, all about that higher interest rate environment. And it is, as we move on, I'll share this with you because regional banks are faring well, but the ETF for the big banks, not so much. And again, I'll share why the divide there this week. So here we are with the yield 10-year. I talked about it pulling back, basically flat for the week. This is last week's big spike. And so the as far as the reaction to this raise, this is the 10-year yield. The reaction that we saw last week did continue into this week with those areas that benefit from higher interest rates continuing to gain traction. Oil prices, I mentioned they're up and they did close at $84. So lots of factors. And I did talk to you about the weaker dollar and supply constraints as well. So lots of factors for why oil prices, but in turn, a continuation rally as we saw in those energy stocks. So let's go ahead and drill down, take a look at some of the weaker areas. And this is one I've been highlighting almost forever. This is the IGV tech software ETF, and it has really continued to take a tumble. Software stocks do not fare well. I'm going to blow this chart up here. During periods of rising interest rates, we can go back to this February into April, and then late April into May, but certainly not this deterioration. So call it what you will, overreaction, but the bigger point is that this downtrend is real. This is an area we started getting out of these software stocks up here as they began to stall and then break down. So a lot of names in there that are 30, 40% off their peaks in price back here in November, but I hope still stands. I have a number of names on my watch list. When that group turns, it can be really interesting. So keeping an eye on that. So from here, let's just take a quick peek here at that VIX, that volatility index. We did close that 20 level, seems to be more the line in the sand. We did close just below that 20, but certainly volatility on the rise. So from here, I am going to take a brief break. When we get back, we're going to take a look at earnings, those ETFs, and lots more. I'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back, as mentioned. I'm going to share with you some of these companies, these stocks that reported this week. Again, not a whole lot of names. I'm going to focus on primarily those larger cap, well-known stocks that can then subsequently impact other names in their area, depending on their results. So a couple of stocks that came out with earnings ahead of estimates. First up, we have Wells Fargo. And I did highlight Wells Fargo here during, I believe, last Friday. they did have analyst upgrades going into earnings. And I'm pointing that out because in the past, I've stated that that can be a bullish signal. Analysts may have some insight that the average investor is not going to be quite as tuned into. And in fact, those upgrades, Wells Fargo did get several upgrades going into their earnings release. The stock is up 4% today, and they did come in with strong numbers. They're citing asset management fees. So certainly a nice uptrending phase here for Wells Fargo. It's definitely overbought, but worth pointing out to you that we did see at least one bank coming in with numbers that were good. Taiwan Semiconductor, TSM, very large bellwether semiconductor stock. And it did gap up here in response to 18% year-over-year earnings. Also, the company's outlook going into the remainder of this year and beyond is really quite strong. The stock really has been in a go-nowhere environment since April. All of this has to do with the company's announcement of huge capital expenditures, $30 billion that they are putting to work to build new manufacturing facilities to increase capacity. And that seemingly most of that, or a lot of that, is behind them. The markets like the numbers. Take a look at this volume here, really helped this stock gain traction as well as other semiconductor stocks. And actually, I did not get into that, so I'll just segue a little bit here when we were looking at those sub-industry groupings. And we can see volatility similar to the technology group, but semis up 2.4% in an otherwise weak day today. So not an upward trending period here for semis, but certainly there are pockets of strength in that industry group. So another last name that came in ahead of estimates, but worth noting, CMC, Basic Materials stock. This is a steel company. And the company came in with 179% year-over-year growth, 32% above estimates. So potentially coming out of a nice 1 week base, nice high volume characteristics here. So in addition to just noting these stocks, what you can do from here is take a look. Are there other material stocks, steel and otherwise, that are faring well? There is a lot of vibrancy in the commodity space, whether it's dollar related or otherwise. So that is another reason I'm pointing out to you these stocks, but also there really were only several that came in ahead of estimates, much more on the negative side as we enter into Q4 earnings season. Here we are with JP Morgan down 10%. The company lowered guidance for this year. Their revenue missed estimates and their trading activity slipped. So breakdown here on JPM. Another bank that reported this week is Citigroup. This stock also sold off. Their net income was down due to expenses. So bigger banking stocks not faring so well. BLK, BlackRock, large asset management, and ETF firm also dropping on earnings. They missed on revenues. One last name, Jefferies. They are an investment banking firm, JEF, gap down. They lowered their guidance going into next year. Revenues were down. Actually earnings and revenue missed on Jefferies. So financials not doing well. It's not what you want to see going into earnings. I'm just going to share one other theme that seemingly is taking place. Two stocks is not a theme, but I'm going to share two names with you here. First up is Sherwin-Williams. The stock already had been trending downward. This was all about multiple high PE, but then it gapped down 3% today because they did cut their full year forecast for earnings and sales. One other company that reduced their earnings outlook, not particularly a great looking chart, but down 8%, is Boston Beer. Pointing this out because both companies cited supply chain issues for the reason of lowering their forecast and guidance. So this may be a theme that could begin to emerge further as more companies report. It'll be interesting to see how much of an issue that supply chain those problems are going to be, but not the strongest start. We are still at the beginning stages. So next week, we have a number of big companies that are due to report their earnings. We have ASML, that's a large semiconductor company. They are due to report on the 19th. Netflix coming out on Thursday, the 20th. Goldman Sachs coming out on Tuesday, and that one gapping down into the release. JBHT, a well-known trucking transportation stock, is due to report on Tuesday as well. So things do begin to pick up, and I will continue to follow this very, very closely as it relates to the Q4 earnings and companies' outlooks going into next year. So let's go ahead from here. I mentioned that there are ETFs that can be certainly a way to focus. I mentioned to you bank stocks, oil, other areas are picking up. So I will tell you ahead of time that the first 5 ETFs I'm sharing are supercharged. They are 3 times, something you need to be aware of because they are going to move faster. Of course, we want them to move faster on the upside, but be aware that they can move equally fast to the downside. So you'll want to put tight stops, if you will. So here is Big Banks ETF. This is BNKU. It is 3 times, so it's a leveraged ETF, fell 3%. I shared with you those bigger bank names that were faltering. So we'll see if it holds support here at this 10-day moving average or not. DPST is a 3 times leveraged regional bank ETF, and you can see it's faring a bit better. This today, the close, this is a bullish engulfing candle. And your outside momentum indicators are positive, and it is a little bit overbought, but certainly worth keeping an eye on. GUSH, this is Gush 2 times, and it is related to exploration and production stocks in that oil grouping. And this one of the names that I've shared with you, this is a 2 times leverage, is one of the most attractive. We can see it's poised to break out of this base. Your outside momentum indicators heading positive, but not really stretched or overbought. So certainly one to keep an eye on. NAIL, this is a 3 times leveraged home construction. And here we can see that this, again, you need to note how quickly it can falter. This was all about last week's rise in interest rates, which in turn pulled home builders down. There were fears that the higher rates would subdue home purchasing, but this week earnings reports did come out. I'll just share with you, KBH came out with their numbers yesterday, and the stock gapped up tremendously here. And then other housing stocks began to perk up as well, but certainly not my favorite ETF, just one worth noting. It is a 3 times leverage. So next up are ETFs that are high yielding. This is a screen that I run, certainly have been lately, given the high interest rate environment and inflation. These higher yielding stocks and ETFs are going to fare better. So MLPX, and this is an energy infrastructure ETF, 5.5% yield, forming the right side of this base and just now poised to potentially break out of that base. And we can take a look at another high yielder, MLPX, and this particular one is a master limited partnership. So I am I'm not doing the correct. MLPA is what we want. This is a limited partnership ETF. I'm not totally tuned in as far as the tax consequences or otherwise, but it does offer a 7.9% yield in a nice confirmed uptrend there. Another one we can look at is a global super dividend ETF. It is, as stated, globally, energy, REITs, utility, limited partnerships. Nice confirmed uptrend here, 5.1% yielder. DIV is the ticker symbol there. Here we are. We're going to go over to the UK. This is EWU, and it is all about UK medical, staples, banks, energy. So you can really see what's working here. This one is a 4.2% yielder. IDB, we're going to talk about up here next. This is a global dividend, 5.5% yielder. Companies, now this is definitely a bit overbought bought, to say the least. So I'm going to go ahead and move on and take a look at Vanguard. VYMI is the ticker, 4.1% yielder. So a lot of these, yeah, this is the high yield ETF. They've certainly had significant moves. We're not early at this juncture. We're going to use precedents here, this March into June period, as precedent if it continues to find support above these moving averages. But at this juncture, certainly at the very least, a pullback before considering. Last up is a rare earth metal ETF, 5.2%. A little choppy here, but this is Van Eck Vector's rare earth strategic metals ETF, 5.2% yielder. So kind of bouncing around in here, but generally looking constructive. So that's it for the ETFs. I did want to, from here, talk to you about this concept of getting in front of these turnaround stocks. And I talked about showing an example of a successful ETF. And I did this on my Chartwise Women show with Erin Swenlin on Thursday as well, but it bears repeating. We are looking at HPQ, HP, the manufacturer and distributor of laptop desktops. And this company was in a downtrend, certainly from this May into the beginning or the end of July. And we've had several downtrend reversal attempts. However, this one in October, I actually pointed it out on our show, and it actually stuck. So what we're going to do from here is highlight some of the characteristics that differentiate it this particular turn. And by that, I mean it broke back above its simple moving averages, why this one held and what was different. So first up, the company, during this gap up above this 200-day, the company raised their outlook for the remainder of the year and also increased their dividend. They were seeing a lot in the way of sales. And so that was one reason, news. The other is on this break above the moving averages, the MACD was in a much higher positive position relative to these other head fakes. And then last up, big volume. So on that news, so differentiators, certainly the stock has been in an uptrend. This gap up is on earnings as it continues to rise. So that is the anatomy of a constructive downtrend reversal. So then from here, we can just take a look. I think I have time for probably one or two names. This is Amgen, AMGN, bellwether biotech company, breaking back above these moving averages here. And now we have the golden cross, shorter term crossing above the longer term. So one last name, and this is a name I've talked about since back here when Goldman upgraded it. This is AT&T on its way to downtrend, reversing its downtrend. So I am going to leave it at that. Those that have not already, use that link below and you can trial my MEM Edge report for 4 weeks at a nominal fee. It comes out twice a week with alerts as needed beyond that, all about getting you in front of the markets, advising when it's safe to jump in with both feet, and otherwise lots of other interesting insights into this sector rotation as we enter earnings season. So everyone have a great week. Hit that like button if you like what you've heard, and I'll look for you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.